Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, January the 13th, 2022. The market gave us some very strong indications of what's up in the NASDAQ's near future. We did break down today. In fact, it pretty much came in that way, tried to rally initially, but then just failed miserably on any rally attempts. So initially I had felt, we got a chance. This wave 3 is going to just take off and going to go. That was pretty much exact moment when it decided to turn and just started to break down. The NASDAQ ended up down over 400 points today. And in the process, broke down below zones that I did not want to see or could not accept because of the nature of the count and what that implied moving forward. So let me just review where we are, what all of this put together could be indicating, and where do we go from here. So I'm continuing to feel that we remain in an intermediate fourth wave correction. Now, using the guidelines that Elliott provided through his own observations and work was that a fourth wave correction will normally end at the terminus of the fourth wave of one lesser degree. So all along, I have been talking about the 14,410 area to be the completion point for the intermediate wave 4. Now, we had some quick moves, made it feel, maybe not. I had felt that this was a decent C wave down. I put the 4 there. The rally off of it was very supportive of a fourth wave ending and a new impulse beginning. And that carried us all the way up to 16,000, which we again saw on the yesterday. I don't think we got up there today. We did not. So yesterday we got up there, and then today we got as close as you could at 15,954, but that was during Globex in the middle of the night. So what has now taken place is that I've taken that back. I've removed the 4, being that I have to feel that it's still in progress. So I still think we're within that intermediate fourth wave. What does that imply? Is that, okay, we have additional downside to do, and that the entire process is more than likely now going to turn into a double, on a minor degree, a double ABC decline. And possibly we're just getting into the A wave here, and we're going to do a B and then come off in a C. So I'm hoping that the whole thing ends up in a zigzag. So we're not just playing out like this did and spending a lot of time moving sideways versus just getting the move done and then moving on. So, but they don't tend to listen to my requests as I write them in. So we will take it day by day. But it is now beginning to show some signs that it might just be a quick drop. Now, let me drop it back down to the hourly chart. And so, because I basically was showing where the 4 was and where we are now. Now, just take a look at today's decline. First of all, it did break very cleanly below 15,234, 734. And that took place at about 11 o'clock in that 11 o'clock hour today. And that did produce some additional acceleration lower. Then we kind of just did a little bit of sideways before it actually sparked again. And then it broke. This was labeled wave 2. Okay, so previous count now, this was 1, 2, and 1 of 3. So if we were in a 2 of 3, what can it not do? It cannot go beyond the starting point for that wave 1, which was right there at 15,475. Now, today's low is down at 58. While the market did bounce and recapture this level, and now is finishing up above it, the fact that it broke below by almost $20, 20 points, I am considering a violation and shutting that count down. Now, NASDAQ, it's in its perfect mannerisms, may just decide tomorrow, no, we liked it. We think that was a good low, and boom, we're off to the races, and it'll just plow higher. So we're just going to shift our pictures a little bit. If now we're indicating that we're going to continue to move lower, we're kind of coming off and starting to really get a little bit overextended here on this sell. Does that mean it can't go further? Absolutely not. It can, and it can remain oversold for quite some time, at least on a stochastic basis, before we would see any substantial rally that was going to pull up this market on the hourly chart. Now, so what can we expect from here? Well, what am I looking at? Possibly a 1, an ABC, a 2, and this is 1, 2, 3, 4, 5, a 3. And so right now, if it gets left here, and this thing rallies all the way back up, then we've got 3 down. So we had 3 up, then we get 3 down. Stranger patterns have happened, but we'll work it out. I'll figure it out. But right now, I'm anticipating if this is a 3 waves down, and this does appear that one, let me open this up so we all can see it. How about that? 1, 2, 3, 4, 5. Clean 5. 1, A, B, C, 2, 3. Now, if it's A and a B and a C, then this could be wave A of this second ABC. Then this we would be at the beginning stages of a B wave. What would the anticipation be or expectations be for B wave? Well, it can throw up some very quick retracements, and B waves, 618, B waves could come up and be flat, although this is more of a zigzag. So I would not, right off the bat, be expecting a total back up to this high, or the area of this high, which is 16,008.9. That was where that high was. I would not be expecting it all the way to come all the way back up there. Can it? Absolutely. It truly can. And then that may force a recount here. And before, I was pretty satisfied with it being a 1, 2, 3, 4, 5, 1, 2, 1, 2, and then see, then I got sloppy. So it became more difficult to even count this as a third wave because it just got very, very sloppy. And at best I'm going to be able to do is 1, 2, and then maybe 3, 4, and a 5. And then it's just an additional first wave. Comes down too far. Again, now you can see it again. Comes down too far. And the market's going to tell us. I actually don't see a different view that'll keep this together, or this thing to just turn and pick up this rally after having pretty much destroying the upside count all in one day. I mean, we ended positively yesterday where, yep, we had a real shot of it getting back above here and really beginning to rally. Because remember what I said, if it drops, if it goes up, it needs to go up in a 3 of 3 type of a move. And it had to go and not look back. Well, it didn't get very far. Looked back and thought, no way, and just kaboom, and started to fall apart. And that's what I anticipate now is going to continue. But we may get a little bit of a rally. If we get a little B wave rally, or on the other hand, if this is 1, this is 2, this is 3, I'm getting a little fourth wave action in here. Fourth wave max could come up to like 15,680. Well, what have we got? 16,669, 68 up in there. but I think it's going to find resistance before that. If it's just a bounce, because again, if this downside, if the selling is going to remain intense or very, forceful, then I start to expect that the buyers aren't going to step in as if they're going to be ready to take recontrol. We'll have decent bounces. Say, for example, from here, it could bounce $100, sitting at 50,490. Sure, it can come up to 590. Why wouldn't it? And it would totally be in. I mean, we dropped 400 today. So recouping 100 off of that, no big deal. So, and basically, even if it were to do it a 50%, that takes us up another 100. So we got 55.94, and then we got 56.94 for the market where it could go, and still be just a small recovery, a small bounce with an additional leg down. Now, being that I believe that we're now in an additional ABC down, several things. I'm looking for more downside. I'm looking for a break below 15,125. And that's where I'm going to go back out to the 4-hour chart so that we can put this into perspective. This is the fourth wave of one lesser degree, and it bottomed at 14,373. The support for the move comes in at 14,411. I'm going to call it. That's where the 0.382 support comes in, and that 0.382 is the retracement of the intermediate third wave. So that would keep us in an intermediate fourth wave correction. And being that this was November till mid-January, makes no difference. It's still perfectly fit. You had November, December, 2.5 months. That intermediate third wave was, I'll go take a look. Let's just go check it out. Intermediate wave 3 began in September of 2021. Of 2020. So it took over a year for it to unfold. So, 382 of a year, we're talking 2.5, 3 months. Why not? So I think that it's very realistic to continue to view this as an intermediate fourth wave. And if it's not, again, we'll deal, because the bottom line here, folks, is whether it's an intermediate fourth wave or something larger, we're still going to have to trade it day to day, and we're still going to be able to trade it day to day because we're going to be taking a look at what expectations and where lines are drawn for support and resistance. So we're going to have plenty to work with. I'm just pointing out on that larger picture and the larger Elliott, it now indicates and suggests that we're going to be breaking down here, and we're going to be sliding through all of this and eventually end up down here before this next segment of this corrective decline is complete. So from where we are, we're talking essentially 1,000 points. And that could be a lot. We did 400 today. It takes us 2.5 days to get down there if it keeps up this rate. So while we might go, wow, that's so far down, it dropped 400 today. So what it can do tomorrow can be another 400. Then we're back down here, even below. We're sitting at 14,900-ish. So let's take a peek back down at the hourly chart and see where our support and resistance lines are coming in. Now, we had this one that was going up, and that was for the up move. And I am now going to remove that one. And now what we have is the downside. This was for a fourth wave. And I apologize. So for this little wave back up, we have 15,668 would be most common. 15,733, and then 15,000, almost 15,800. We have the hourly 4 at 15,587, the 8 at 15,687, and the 20 right stuck in there at 15,756 with the 50 at 783. And they're all pointing pretty strongly down. Okay, and then the 200 is all the way back up here. So I'm not expecting the market just to turn and put aside everything that's taken place over this decline, and that it has been pretty strong. Now, bounces notwithstanding, I am now expecting more of a downside move. So we need to allow for the little bit of an upside, a bounce. It should be 3 waves. Maybe it could be, as big as that. Maybe it'll take all day tomorrow. Tomorrow is a weekly expiration. The sale through down lower today took many stocks right through many of their strikes. And particularly we're looking at Tesla, which was started the day above 1100, now finishing day well below 1100. That's a lot of strike prices that it sails through. Microsoft down 13.5 points today. It sailed through a lot of strike prices on the way down into it. Same story. Google, same story. Facebook, same story. They all have to make adjustments as the selling gets more intense and strike prices get broken. And it breaks through additional strike prices. So that puts a lot of pressure on options traders. Tomorrow's the expiration for that January, so it's a weekly expiration. So a lot can happen, or it could just get to a point and sit still because everybody's going to try and say, please, let's just keep it here. We'll deal with everything else on Monday. So what are we looking for? I'm looking for a bounce. I'm looking for a bounce higher. That bounce higher begins to have resistance at 15,588. Then it has more resistance just above that at 15,668. And so actually that's about 80 points higher. And then it's got the 8 moving average. And also then the next resistance above all that is 15,733. I believe that should control and contain the bounce if we are still expecting stronger downside. If the market starts to break tomorrow above 15,800, it's going to throw another wrench in how we want to view the market and what it's doing. And that's one of the challenges many times, which is why I'm going to drive this focus to just a very small time frame, which I'm doing within the hourly chart. So here's the gig. This market needs to hold for downside moves. It needs to really hold below 15,800. If it moves back above 15,800, it throws the downside off kilter. It leaves this as 3 waves down after it did 3 waves up, and puts into question what is the bigger picture. Now, doesn't mean we can't trade. What we can do is just continue to follow price action, moving averages, and Fibonacci. When it breaks, we can feel that it should go even further. So in other words, when it broke overnight, actually this morning, when it started to break cleanly below the 50, boom, we accelerated. We hung out, then it was breaking support and we accelerated because it was breaking levels that many thought, okay, this shouldn't be happening. And it accelerated, forcing additional heavier selling. Now, if it does the same thing going back up, you've got everything, or many, many traders starting to reverse yet again, back and forth. It gets tedious, but it happens because that's what the market is doing. So when things get pushed into one side of an extreme, it forces a lot of adjustments that can create additional extreme. But when that turns and it's doing it in the opposite direction, it's doing the same thing, forcing a lot of adjustments and pushing things again to an extreme on the other direction. So what I mean by extreme is that it goes further than it should. It goes higher or lower than you're feeling that it should. It breaks support and then it jumps back above the support. These are just a lot of reactionary type moves. Now, coming down, we start to really lose out on a lot of, and I'm going to take all of this off so we can see them more cleanly. No, that didn't work. All right, so remove that. What do we want to do? I need to put in a large enough Fibonacci extensions to cover what we can look at going down. So, at best I can do, I'm going to be comparing this leg with this leg, with this C wave. And may not be the most Elliott-wise Fibonacci, but it's one that I feel works and gives us some good indications of what the possibilities are for the market coming off. So I'm going to include this wave, and I'm going to run it up to that high that we got to yesterday. Now, what does it look like? Let's take it back down to that hourly chart. Let's open it back up a little bit, and now we can look. We do have, underneath all of this, we have support, and it's 0.382, but that's coming off. Support where this would be 0.382 of this. And then we have outside on a larger view, additional support at 15,311. Then we have underneath that 15,257. Now, I think that if the intent is it's going to get below there and it's going to do it lickety split, these may cause a slight pause, slight pause, slight pause, and just go. So I think the first one that could cause a briefer or a little bit longer pause would be 618, which is at 15,079.80. Then we have 14,948, 14,826. And then we start to get a little tiny bit of overlap right here. And it's about 100 points, and that's going to be the zone for completion of the move. If the count is going to stay as it is. So we have 15,504 and 14,410 for 11. That's the 382 for the intermediate waveform. These are for the downside move now in progress. And understand that it's an A, it's probably A, and now we're getting a B, and then we'll still get a C wave down. That's going to be my best guess on what's happening. So tomorrow we may end up with an up day, being an expiration, slower than what we've seen, or we'll get the opposite, where it's going to be, there are going to be more investors or traders or whomever that are just going to be selling, and they're not really caring about whose strike price needs to be in line for that expiration. And if that's the case, the selling will be yet again intense. And they'll start dropping it through these supports. And that one will aggravate the other in terms of just what I said. We are going to go through strike prices, adds more adjusting, and it likely will come on the sell side. Okay, so that's our picture for tomorrow. And again, just focus on the price action, focus on the moving averages, focus on the levels that you have, where you maybe say this should be support. I may be not marking it, but you will. Use those levels. Those are levels that you have trusted in the past. Trust them now. And keep your eye on moving averages. Again, I'm going to start back up on the daily. So just to go over these moving averages as quickly as we can. And here, 50 cleared yesterday, tried, didn't, tried again today to get above that 50, failed. That failure brought the big guns out, and it dropped below the 8, and it dropped below the 4, and it's closing below. It's a negative indicator for the market. The daily bar broke 1, 2, 3, 4 moving averages, and now has closed below 1, 2, 3, 4 moving averages. I will include the 20. I went up and touched it, could not hang on to it. 50 went up through it, going to the 20, failed, came back down. The 8 broke it, came and closed below it. The 4 broke it, closed below it. So I think that there's a negative pall being hung over the markets right now. What's up next? That 200 at 14,947. That's important for the daily chart. The daily, if it comes down and we break below this, it could get very ugly. It could get very ugly. Two things going on. We're breaking below 15,000. Then we're continuing. We're and not just breaking, but now we're officially below, and we're hitting, midway between 14,900 and 14,000 and 15,000. And that's right where that 200 sits. I think if it breaks, it's going to bring with it acceleration. These are points of recognition when this stuff occurs. When these big, longer time frame moving averages are broken, they carry consequences because of the technical nature of how they're interpreted. A break on a daily chart puts a lot of things into risk, particularly if you're long. Now, that's the daily picture. Let's take a look at the 4-hour picture. Open that up so we can take a quick peek. Come on. Try it again. Thank you. So just from today, pretty much in that first hour, market broke below the 50. The market broke below the 4 and the 8. The market broke below the 20, all causing acceleration. A brief little bounce, more acceleration as everything falls into place. Now, what's happening now is that these moving averages are beginning to line up on the 4-hour chart, and blow it up even more. See? That will start to turn lower. The 50 is starting to turn lower. The 20 is now pointing lower. The 4 and the 8 are pointing sharply lower. If the 8 this starts to sail, this starts to move, then we're talking that everything is in alignment for downside on a 4-hour chart. Okay, going to go down to the hourly. We'll take a peek. And you do this all the way down to your 1 minute, by the way. Here again, the hourly chart. We broke the 200. And at that same time, we broke the 200, we broke the 4, we broke the 8, we broke the 20. Boom. Within 30 minutes of the market's opening. Boom. It was serious. Get out of the way. And we saw the acceleration. And then it broke the 50. We saw more. Rally attempt to get it back fails. What happens? Selling. Here, 4, 8, 20, 50, 200. 50 starting to turn. It will join the party and pointing hard down the hourly if we get another strong down day. The 200 will start to turn. That's the hourly chart. So it's not presenting us with a more bullish outlook for tomorrow. The moving averages all have been broken and are now falling in line for continuation. And the furthest I'm going to go, and then I'm going to call it a day, is the 30. See what happened? The 50 finally crossed back below, the 20 crossed back below, the 4 and the 8 crossed back below that 200. That major. You can see when it all happened. And look, boom, boom. You get the follow through. It's when they all dropped and went back below the 200. So again, things are not lining up for this huge turnaround to happen. Doesn't mean it can't. It's just not something I'm actually looking for right now. So that's going to be it for today. Our next update will be on Sunday, January the 17th. Actually 16th. And tomorrow, keep an eye on price action. Get your mindset together. Keep focused. I'm hoping we got business to do, but you're going to have to keep focused. You're going to have to block out noise that forces you away from focusing on what's happening right in front of you. Oh, look at what's happening here. Oh, look what's happening there. Oh, what's this market doing? If you've got a CNBC in the background and you really can live with it, God bless you. But if you're finding it to be distracting and noise, turn it off. Even if reading alerts that might come up, if they're helpful, keep them. If they're noise and distracting, turn them off. Your mindset is going to be important to be able to trade. If a market that's going to move, no matter what, you need to stay focused so that A, you can see and catch these directional changes. On an hourly, a 30-minute basis, directional changes are important to get so that you're not fighting the market, you're going with the market. And the only way to do that is to keep your mindset together and stay focused. Do not care about the who, what, where, when, or why. Because it's happening. Whether you're looking for it or not, it's happening. Okay. Have a great trading day tomorrow. The next update will be on Sunday.